And yeah, so the fun part was also like going from very small businesses like to very incredibly large businesses, which are present in many countries. So there are examples of like IKEA, where we serve it across many countries in Asia. Decathlon, which we serve in many countries across Asia. So there's like a few cool things in that.
So your customers kind of took you to the different geographies that you had to go to. You're serving them anyways, figure it out for them, and then now you have a nice.
See, the enterprise will have finance departments, will have chartered accountants or CPAs, and and even consultants. So where do we fit? We fundamentally give you a digital platform. This platform sits on top of your ERP system. Now, SAP, Oracle, Microsoft, Tally, Sage, QuickBooks.
Welcome to episode 144 of Founders Unfiltered. I'm Aviral here with Mazin. Today's guest is Archit Gupta, founder and CEO of Clear, India's leading fintech platform dedicated to simplifying finances for individuals, businesses, and chartered accountants. Founded in 2011, Clear offers cloud-based solutions across e-invoicing, tax filing, GST compliance, payments, and credit management. Trusted by over 7.5 million customers, including 20,000 plus CAs and 10,000 plus businesses. Clear is automating complex financial workflows, driving compliance, and helping millions of Indians save time and costs. In this episode, we'll dive deep into Archit's journey from spotting what was a broken compliance ecosystem to building Clear into India's most trusted fintech platform. We unpack how he has turned a highly regulated, legacy heavy industry into a technology first solution and the hard lessons learned along the way. Archit, welcome to the podcast.
Thank you, Aviral, for having me over.
Super. Before we get into your journey, would love to start with a rapid fire. Short answers, whatever comes to your mind immediately, if that's okay. A founder or leader you'd blindly back?
Dipinder Zomato.
Okay.
Early stage, I'm backing a friend of mine, Pratik Mittal, who's a professor at Princeton. He's running a cybersecurity startup.
One book, film, or mental model that shaped how you think?
More recently, American Icon. This covers the story of Alan Mulally in the turnaround of Ford.
A myth about fintech startups in India you wish more people knew?
There seem to be two profit pools, one lending, one future and options. So choose carefully.
Your go-to ritual or daily habit before you start work?
Making my own black coffee.
If Clear didn't exist today, what would you be building?
Something in AI, possibly either infra for AI or apps, which help individuals.
Nice. Helping individuals seems to be core though. Still, I think the form factor has changed, but you want to help.
Yeah, I think consumer still is first love, although 80% of our business is enterprise.
Nice. So it's a good segue into what you do at Clear. How would you describe the problem you're solving and why does it matter?
We solve problems for two different segments, Aviral. One for consumers, where in India, individuals who have to file tax returns, that's the first problem we attacked and we solved, which is basically folks needed technology to help them simplify like how to even go about solving a tax return. When we started, incidentally, uh, there was no portal by the government, and it was very hard. And the problem origination came from my dad, who's a chartered accountant in India, and he was describing how painful it is, and everything had become digital and electronic filing had come about. So the company didn't start as a company; it started as a prototype. That okay, can we help? The end user simplify this problem? Subsequently, when we put it on the internet for consumers, is when we saw most of the traction come in, and in fact, organically, it was all word of mouth, no marketing budget. So it's pretty cool. Like we were able to solve a tough problem, once a year tough problem for millions of Indian uh, end consumers. Subsequently, more recently, it's been very exciting. The evolution is towards more complex tax returns, more complexity, more difficulty. Basically, the trend line of India's financialization, like India, more equity participation by Indians, more participation in FNO, crypto, etc. So that's one angle. The other one is generally, like, one pattern in India is the rich are getting richer, in the sense of uh, the income of a certain segment of Indians is going up, not the number of taxpayers in the absolute. So the number of people who have complexity has gone up quite dramatically since we started, and so our focus is helping more and more folks who have, like, let's say, RSU ESOPs or more complexity. So that's the big change on the consumer side. It's been fun, and like with AI now, a lot of things change. On the uh, enterprise side, GST was the entry point. If you recall, in 2017, India implemented goods and services tax, and that was a very big change in our country in terms of going from, like, this huge fragmentation that India had in terms of state centers, how business works, enterprise versus uh, the, like, SMBs versus, like, different states had different policies, no uniformity in tax rates, no uniformity of how the country was structured. Uh, as 2017 came about, GST came about. Uh, some of the traction came when the India decided to put it all on APIs and digital taxes, digital infra, and so that's when we got started on the B2B journey. So it was a very interesting sort of divergence into enterprise SaaS. And initially, Aviral, it was very interesting. We thought the product market fit will come from small businesses. So, so our thought process was, okay, just like UPI, digital rails by India, billions of transactions on the UPI side. Similarly, there's billions of transactions on the GST and e-invoicing side, but the product market fit came on two segments. One was large cap enterprises and chartered accountant firms. We actually didn't succeed on small businesses, so so that was very interesting. So where we started versus where we headed, and once we started serving uh, enterprises, it's been interesting. Like that's 80% of our revenue. Plus, we went global with the platform, which was a surprise to all of us as well. Because when we had started, we thought, okay, taxes tend to be a very country specific matter. There will be no platformization to go global. And when we had started, the thesis was a lot of small businesses, millions of them will use our platform, kind of like Zoho or Tally, if you will. And then it was more Salesforce or ServiceNow, enterprise SaaS. And then going global was very interesting. And we are now in multiple international markets. So, and international expansion is now one primary driver of focus. So, yeah, that's the evolution of it.
Nice. And like you mentioned, fintech startups targeting payments and lending when around when you were starting, and more recently, more equity focus, etc. But you went for tax and compliance, which is complex. It's heavily regulated because that's what it is. There's very little room for error. What made you believe that there was an opportunity here?
Yeah, so actually, we did not know that there's opportunity. To be honest, we didn't do like market sizing. We didn't start as a traditional startup. We started, and for that matter, we were bootstrapped for the first 4 years, and Y Combinator was the first money in to uh, clear tax. And at that time, there was no VC ecosystem or seed ecosystem uh, to to speak of. It was very early in that sense, and I think I guess we were just trying to be useful in the sense that the initial spark came from a problem which was close to my father, and then as we started giving it to more users sort of resonated. Um, but I think we have we have navigated into deeper product market fit over time. But I'd be the first one to say, we didn't formally start in a place where we had a very clear, oh, this is fintech. The word fintech did not exist at the time. Oh, this is the class of problems. This is the addressable market. So it's very interesting. Like it's a complete, where you start to how you evolve kind of evolution.
And I believe you were the first Indian startup to be backed by YC, and then you were part of Peter Thiel's Founders Fund. Can you tell us a bit more about how that happened and the impact that it had on you and the company?
So my background will be a little useful in that context then. So I was working in California in the Bay Area before starting Clear and ClearTax. So I had read PG's essays. I was very aware and familiar with the brand of Y Combinator and so on and so forth. But what I saw when I moved back to India and we initially didn't raise any capital. We were bootstrapped, and then there was not enough of a VC ecosystem or a seed ecosystem at the time, and it was very unclear how to navigate the company to me. So we had seen something is working, and we were bootstrapping it, and then I was trying to figure out what should be the next move. And at that time, YC, I observed, had just about taken their first international startup. I think it was a LATAM startup. So observing that, I thought maybe the gates are open. Maybe there's an opportunity here at YC that they will start thinking about international startups. And then that's when we applied, and we sort of became the first India-focused startup accepted. There were obviously a bunch of Indian entrepreneurs they had funded, but this was different. Like they started thinking about global markets and international startups. And in terms of Founders Fund, I think that was very cool. In terms of, I think the YC demo day, post demo day, you sort of get to know a lot more investor ecosystem, and I think they really enjoyed the progress the company had made and the kind of impact we were having. So that became the genesis of that investment.
Nice. And so walk us through your evolution then. You bootstrapped the first couple of years, then you had YC and VCs coming in. How did your company change, and what was what was the problem statement at that point in time?
Mazin, so we started with with bootstrapping, and then we raised some money, and then we raised a seed, subsequently a Series A. Seed was the first milestone after Y Combinator. Series A, we sort of progressed. At that time, the business plan was to focus on consumer taxes, and we kept it free and treat it as a wedge into broader financial services. So we were largely thinking that taxes as adjacent
acquisition tool.
Taxes like a funnel and an acquisition tool, and we were not spending. And subsequently, we have almost never done any marketing, and we have not spent any money, if you will, on advertising dollars. It's will on organic for us. So we thought of it as an entry point and a wedge to affluent Indians, and then the adjacency we thought was wealth kind of financial services, or like things which are needed by a slightly more affluent section of India. So that was the thesis. But as GST came, 2016, 2017, we'd raised money in 2015. 2016 is when GST, the API started to come out. The government started describing the platform. We were one of the largest API consumers on the tax side any which way. So we were invited in for the consultation papers. And so we thought like this is a solid opportunity to create value. Uh, the divergence of B2C, B2B is only visible now in hindsight. I think there's like a lot of evolution can be seen as a pivot also towards B2B. But we kept the B2C business separate. Uh, so we put all bets behind one horse. We didn't build the wealth business or other things. We just focused on taxes, and then we started building the
And that was because
enterprise
of the
SaaS
timing
product.
of GST coming in, and you just seeing this opportunity right there. So you kind of that pushed you towards B2B and going deep on taxes.
Yeah, and so so our thought process was any which way there's a next evolution to do. So we just figured like, okay, if the country is going to do a lot more on taxes, can we do a lot more on taxes with the country? And we didn't sort of have this very clear distinction of, oh, is this a B2C problem or a B2B problem? We thought of it as a taxes problem in the beginning. And subsequently, we've discovered, as many startups do, like different segment, different customers. So the entire company DNA shifts and all of that. So those are fun stories to tell. But the interesting part was the walking that journey of the GST and then postponing everything around consumer. We made sure like the consumer group is protected and kept separate, and they kept growing the user base and kept improving the product. But we had to pick a lane. So we picked a lane that, okay, we'll do enterprise taxes, and we paused on like adding more services, adding more product lines to our consumer business.
No, that makes sense. And walk us through the next step. So now you saw that enterprise was kind of the space that you wanted to go, and how did you go from there to kind of expanding internationally? Because, like you said, that's kind of not obvious, right? Taxes seem like you were going deep. You were focusing on India. Walk us through that next jump.
Yeah. So, uh, so that's been a very interesting journey. On the enterprise side, if you recall, in India, 2017 is when GST came about. So in the beginning, the hypothesis was, okay, we will provide SaaS to small businesses, enterprises, CA firms, and see what sticks. And the way initially GST was imagined was actually far more complex, needed a lot more technology. Eventually, when the implementation
Interesting.
challenges came in, like
They started
sort
cutting
of
in
had
scope.
to, yeah, they started cutting in scope. So like there was a lot of regulatory whiplash that we found ourselves in. So we would see our revenues climb up, and then suddenly the regulatory policy would change, and the revenues would like fluctuate, and like so navigating all that was extremely actually painful. Um, so the first 3 years was actually a lot of regulatory whiplash. The platforms, the government had to stabilize, the policy had to stabilize, and so we just like kept doing work. I think 20 when COVID hit, actually, then regulatory stability came in, and then India implemented the electronic invoicing, which meant every invoice which was moving started to see like a real time use case, and so we started growing with that subsequently. So eventually, yeah, our platform got stable, and then we saw multiple countries across the globe, and that was the surprise that multiple countries started implementing e-invoicing just like India had. And so our platform sort of became, oh, this capability we have built and this kind of scale India forces you to deal with became sort of the cool entry point, which we then took to Saudi Arabia, then Malaysia, and now multiple countries in Europe and the Middle East, and so Asia and Europe broadly. And obviously ACVs in the global markets are much better. Average selling price for the same technology is about 10x better price points. So it's literally like 10x better from a per unit perspective. And because of the fact that in India we serve very very large throughput customers, right? Like Zomato Group or Tata Retail or Tata AIG, or like very diverse kind of use cases. We could go global. The technology, we kept making it better from the launch to where we are, and there's a lot of focus on depth in our company, right? So we're very good at complexity. We are very good at taking complexity and turning it into technology. So that became sort of the entry point. So we can navigate and understand multiple countries' taxes. We can sort of figure out like what are the common elements across different countries. So we sort of understand like how every country ticks, and like we have a platform capability to say, okay, we can take multiple countries live onto the platform.
Incredible. And looking
And yeah,
back
so
at that,
and the fun part was also like going from very small businesses like to very incredibly large businesses,
yeah.
which are present in many countries. So there are examples of like IKEA, where we serve it across many countries in Asia. Decathlon, which we serve in many countries across Asia. So there's like a few cool things in that.
So your customers kind of took you to the different geographies that you had to go to. You're serving them anyways, figure it out for them, and then now you have a nice. And so maybe those few years where you actually were going back and forth with the Indian regulators actually helped you kind of develop a much deeper understanding. But in hindsight, is there something you would have done differently?
The number one thing I would do differently is perhaps go global faster. So the monetization is much deeper in the global markets, and the enterprise and the diversification to enterprise I would have done faster. I would have let go of our SMB business much sooner. That would be the big thing that we subsequently did in the last 3 years. I would have, like, in hindsight benefit, just do it faster, do it
That I don't
sooner.
Fair.
Because the other parts are just learning. I mean, the other parts of like platformization, technology investments, those are learning. And then the parts which we have invested in, like in the last 3 years, I've spent a lot of time on our culture, and those I would do like much earlier. So spending time on the culture of the company, I would have spent like I'm in hindsight, I feel like, oh, I should have done this many years ago. I should have thought about this formally like much earlier. And those are parts which I'm really enjoying. But culture is like one piece at a time, and being at it for a long time. But that's the most exciting part now. The culture sort of, I can literally feel it, right? That cliche, that culture eats strategy for breakfast kind of cliche, right? It's a huge cliche, but it's
Yes.
real, like, right? It's
You can see
like
it.
yeah, I can like feel it every day.
I mean, talking about that, you started to touch on it, but I want to understand a bit more how you have changed as a leader as the company has gone through its pivots and it's grown.
Yeah, a few things, right? One on the, let me break it down then. On the business side, I think thinking through very explicitly on market sizing. Market size today and market size tomorrow. Like maybe like what is the market size today and where can it be in 5 years? So that muscle we had to build as a company. I think what we've realized is you need large terminal end state market sizes so that you have a lot of room to grow, or you start adding capabilities so that your market size keeps growing, either on the adjacencies or in the core, right? So that's very important. What we figured. So market size is one, either today or tomorrow. The second thing that I've really personally spent a lot of time on is thinking very closely about our culture and our values. And one of the values that I spend a lot of time on is what we say as open and curious. So what we've realized is that sort of curiosity is the, like, high quality curiosity is at the root of solving bigger problems, uh, whether it's for the customer or whether like it's various different problems. And with AI, that whole curiosity angle gets accelerated because LLMs are great at being curious, right? Like if you're curious, like LLMs can push it much further. So what we've uh, really honed in on is this value of how open are you, how curious are you, are you open to like new ideas, new feedback, changing the ways of work, because the company has really evolved, right? Like the origin point of B2C versus now being enterprise SaaS, serving in Saudi, in Malaysia, in India, in the French markets. Like there's so many, and there is a local element in taxes, and we have to behave in a very local manner in some of these countries. So and we have employees in from different parts of the world. So there is that deep evolution that we are going through. And on the third one, as a leader, uh, I think there's this massive evolution that I've had to do in terms of uh, learning the right balance on what do you delegate, how do you delegate, when do you not delegate, and those may I mean, like there's a lot of books and a lot of articles and a lot of social media stuff on it, but I think it's sort of it's sort of a very fine evolution that I feel has happened on that one.
Really, really interesting. Thanks for sharing. And want to talk about your competitive edge. Over the years, your company has changed quite a lot. The space has also evolved. I think you have a lot more players now in the landscape. So, what would you say is your biggest USP as a company?
Yeah, so one is I think we really focus on taking very hairy customer problems and then turning it into a product technology solution. So in terms of let me give you examples, right? On the consumer side, right? Just this tax season which is going on, what we observe is that uh, like we wanted to solve how can the customer have a one click tax filing experience. Then we realized, okay, you know what, we'll need uh, to integrate with all the brokers. So we have 52 broker integrations in India, right? And we first did, okay, we thought like, okay, can we take the easy way out? Can we do the top five? The top five brokers will have 80% of the users. But then we discovered many users have multiple brokers. Many users are with the long tail of brokers. India being such a diverse country, uh, micro markets and segments have different uh, like different winners in this equity broking space. So we'll just have to go connect with so many of them, and so it's very interesting. All of them have different formats. Everybody has different uh, understanding of taxes itself. So the way they account and their ledgers are different. So we have to then be the sort of single source of truth. In terms of like, okay, and people, like, you'll find it very interesting, have multiple brokers, they have multiple transactions, and taxes being what they are, you have to uh, you have to follow a bunch of rules in terms of, oh, first there may be last in first out on a transaction, or first in first out on a transaction. So all of that complexity our software captures, hides it from the user, and presents it in an easy way. It may feel very easy, or new regime versus old regime, but there are so many this is in taxes, right? Like you can claim certain deductions in certain regimes, and it may feel very easy, but there are like all sorts of these crazy rules where you can only switch regimes twice in your lifetime. So you have to optimize, okay, is this right for the customer? When do you do this? And all of this complexity we capture in software, and we don't expose the complexity back to the user in terms of trying to optimize their tax refund. So this kind of uh, the DNA of the company has always been product craft. So just making sure that the product craft comes in that sense on the consumer side. On the enterprise side, now we've built like a lot of muscle and capabilities and differentiation. So one is literally like managing complexity and the things that I talked about. But the other parts are like we have very rich data platforms. We have very rich integration capabilities with SAP systems, Oracle systems, POS systems, e-commerce systems, order management systems. Because all these customers that we are engaging in have so many diverse IT environments that you need to go connect with all of that on the enterprise side. So what you will see is that over there we shine. Over there, uh, we are very focused on making sure that the customer does not have to understand taxes, both on the B2C side and the B2B side. What we've realized is employee turnover on the B2B side is pretty high. We are the better source of a system than the Excel and manual work that companies do. So I would say, Mazin, those are the differentiators. Um, Over time, we've just built up those capabilities of enterprise SaaS as we've gone along.
And what kind of scale are you at, Archit, today, if you can share?
Yeah, scale. So in terms of customers, like roughly, if I look at it, like the millions of Indian taxpayers use our platform. We had the platform was free at some point, and then we started on the consumer side charging for it. And so it's very interesting. When we were free, the number of users was about like roughly 2x of where we are. And then when we started charging, it fell to half, and then it is slowly creeping back. So we'll soon be at a place where we can be roughly equal to where we were when we were free. Like this is free 3 years ago. The user profile has shifted. The median income has gone up by 2-3x, depending on the cohort. So that is very interesting. On the enterprise side, we serve 4,000 roughly enterprise logos. We serve a lot more CAs and small business logos, which I'm not counting. On the enterprise side, these are like large logos, could be publicly listed companies or mid cap to large cap or very large cap. So essentially, like logo wise, 80% in India, 20% outside, but revenue wise, the outside is climbing. And yeah, in terms of revenue, I feel like as a private company, not putting it out there, but the 50 million mark will happen shortly, and then the goal seek will be how do we get to 200 million US dollars of annual recurring revenues. So that's sort of the goal seek that the company is now on.
That's super from a scale perspective, and I think the international markets will obviously contribute a lot in terms of just top line. When you look at enterprises, what do they use you specifically for? Because they're so vast and large, and they'll be having their own CAs and finance teams. Where do they find utility with you?
Great question, Aviral. So stepping back, we serve the CFO office. So the enterprise is like there's so many complex use cases, as you said. So we focus on the CFO and the finance office. In that, where we shine is a few places, right? One is like three broad pillars. One is compliances and taxes, which is electronic invoicing, which is real time reporting to the governments or to customers. Second is taxation, which is indirect taxes or direct taxes. Now, indirect taxes are what you pay on every transaction, GST or VAT, depending on the country. These are nomenclature, and then the follow on that is direct taxes, which is withholding taxes on your vendors, on your shareholder dividends, or your employees. There are these general class of, and then you may have goods moving inside the country, imports and exports, and you may have to comply with customs and what have you. And subsequently, we also added with a couple of M&A, we added company secretarial compliances, so dealing with your board management, minutes, SEBI compliances for reporting to SEBI if you're a public company. So that suite we bought another startup. So this is for, so largely if you think of us like taxes plus compliances and so on and so forth. Now, so this, as you said, the enterprise will have finance departments, will have chartered accountants or CPAs, and even consultants. So where do we fit? We fundamentally give you a digital platform. This platform sits on top of your ERP system. Now, SAP, Oracle, Microsoft, Tally, Sage, QuickBooks, these are ERP systems which enterprises may be using. Now, depending on their size, scale, complexity. They may also be using order management systems if they have e-commerce or quick commerce. They may be using point of sale solutions if they have some retail footprint. So there's a combination of everything, and then enterprises can also be a mishmash of M&A that you may have gone out and bought like another business in another country or in the same country and what have you. So in this, but like tax reporting may happen at the group level or the entity level, and so there may be the way you do your accounting may be for your business unit versus how you report. The government may want a totally different like view of the data. Now it's very interesting, like managing and orchestrating all this. And in the India context, every state is different because that's how India runs, federal and state. So all of this technology is what we provide. On top of this, you can use your own team or consultants on the outside, and you can add it to the platform, and just think of it as orchestrating complex transactions on a digital platform towards your government and towards your vendors generally and customers. So because that's who you are transacting with. So that's what we provide. This is most of our revenue. And then there are two more product lines. One, we are now the second product line is AI, which is AI agents for the CFO office. So where what we have done is we've verticalized our AI in terms of we see a lot of use cases for just the finance office. Okay, you want to triangulate this P&L, you want to take care of this. So AI is very good at for the financial analysts in the team, and then or they could present up. So over there we have a AI agents where you can dynamically create agents, or you can take pre-configured agents and use them. And the third use case is around supply chain. So vendor and supply chain financing, payments, all that. So in that, we had bought a company for supply chain financing. We are doing roughly about $100 million of invoice financing every month, where the enterprise and the vendor is typically looking for credit, early payments, and what have you. And then the CFO office is the place where they need vendor management, vendor queries, AP, accounts payable, invoice digitization, invoice financing. So that suite is the third one.
Got it. Now, cool. I think that makes sense. The AI agents will be very useful, and it's good that you're getting into that, given you have built all these relationships and trust. I think that's super important. What does Clear look like in 2030, if you had to articulate?
80% of our revenue is India. I think with India growing, I feel it should fall down to 40% while India will continue to grow. So it becomes a 60% global revenue, a kind of company, maybe even 70% global, while India continues to compound. India in itself gets even more interesting, because we go from being the fifth or fourth largest economy to clearly a third largest economy in the world with the current growth rate that many analysts forecast. So India by that time should reach a $7.5 trillion economy with GDP per capita getting to something more interesting. So then the SaaS adaptation also goes up a lot more. So I think India gets very interesting, third largest economy, us being the number one player, the dominant brand, and a lot of Indian companies going IPO because financialization continues, public market appetite continues. The more Indian companies go public, the better it is for us, because they require a lot more technology to remain compliant, and then they're happy also to invest because equity markets are favorable, so they raise equity on better terms. And guess what? CFOs then spend it on. One of the things is compliance, actually. They want to get better on that, because if all the reportings are on time, that's taken as a very strong signal that you are a well-run company. And digital compliances keep going up in India. We, as a country, we have decided we will not do anything on paper, right? We build digital infra for everything. So that is very good news for us. Second, this is on the India side. The second, on the global side, it's fascinating that all of Europe has decided to go to digital taxes from paper taxes. So we just got super lucky, and there's a tailwind here that Europe has been on paper taxes, if you can believe that. India was much ahead than the rest of the world, just like UPI. And they have a European Union mandate called VIDA, VAT in the digital age. So everybody in European Union is moving to electronic invoicing and digital VAT. The reason for that is very interesting. The reason to move there is if any country does digital taxes and digital invoicing, that country's tax revenue goes up by 20% in 12 to 18 months. And it CAGRs also much faster because the tax leakage goes down. So from a government perspective, this is super valuable because they sort of start to plug the tax gap. So Europe and multiple parts of Asia are going and implementing electronic invoicing. We just saw it happen in Saudi, Malaysia, UAE is going right now. Singapore is up next. We also know Japan, Australia are announcing their programs. multiple Southeast Asian nations, multiple Middle East nations, multiple nations in European Union. LATAM and India have been ahead. It's very interesting why they are ahead, because they are like a little more third world, a little more emerging economy. So they need the tax revenue much faster. So they went digital much faster. LATAM went 10 years ago, India went 6 years ago, practically. So that's the evolution like all these nations are on. US is different. I think they will not do what the rest of the world does, as you may know. So by 2030, I think most of the planet, other than the US, so basically 70% of the world's GDP is electronically invoiced on the B2B side, and is doing digital taxes. So for us, that's the huge opportunity for the next 5 years, just to take up market share and to cement positions in these large public companies or privately held large companies. Like really nail that, scale that, solve taxes very well, solve electronic invoicing very well, solve cross-border movement very well. So those kind of things, like we should do really well, and our revenue should go up multifold from this entry point. And then the third one is AI. So we should be a AI native company with AI building our technology, AI running the firm on operations, and like a lot of revenue per employee scaling up dramatically because of AI. So fundamentally, like become a AI first company.
Understood. Understood. And to close out, and why we call this Founders Unfiltered, what's one piece of unfiltered advice you've received that changed your journey?
Yeah, I think the biggest one was the biggest one, which really has made a world of difference, is actually shifting from measuring the company and ourselves from outputs. Let's say output is revenue, or this target, or what have you, or this product does this, or to inputs in terms of like, are we doing the right things? Are we building the right capabilities? Are we just just doing what matters most, and then let the outputs take care of themselves? So I think that shift has been that input came in, and it was pretty raw, and it was not easy to process and to truly understand, because it's a very abstract kind of an input. Because how do you disambiguate accountability and result orientation? Because you want to be really accountable and you really want to deliver results, but how do you move it towards inputs without lowering the bar, actually raising the bar on that, and being super consistent, that you can have like teams can have a bad month or a bad quarter, but how do you keep compounding? And if the inputs are great, the output takes care of itself, kind of cliche, but how do you head there like truly? And then that sort of unfiltered input that, oh, we have become too output obsessed. We started very inputs first as a company, then we became a little too output obsessed, because I think there was a period right till 2021 where the output obsession helped in terms of raising large rounds, and then I think the ecosystem course corrected, right, with the bubble bursting on the tech side, with 2021 bubble burst. So I think from that phase, I think we got like a lot of evolution in a great manner. We focused truly on inputs, and I think that has put the company on another level of trajectory.
Awesome. Archit, thank you so much for your time. It was awesome learning about your journey, and diving deeper on a very interesting category in fintech. Usually we get lending and payments. So this was super cool.
Yeah, I think the category tends to be unsexy, so I think it's kind of cool.
Unsexy are good categories, though, I feel.
I think so. We've been at it. So thanks, Mazin. Thanks, Aviral. This is super fun, and you guys ask very insightful questions. Thank you.
Thank you.